wants to know what the economic survey has to say, and the biggest number is out as far as 6.3 to 6.8% is concerned. That's the expectation of the real GDP as far as FY26 is concerned. It's in line with expectations as to what the market was working with. The street was bracing itself for the fact that the growth in FY26 is going to be below the mark of 7%. IMF was talking about a 6.5% number. Even RBI and the other NSO's first estimate were talking about a range anywhere between 6.4 to 6.6, 6.7% thereabouts. That's exactly what the estimates have come in from economic survey as well, 6.3 to 6.8%. But the good news is they're talking about there are many upsides to domestic investment, output growth and disinflation in FY26. So that's one positive comment coming in. Food inflation, which has been sticky, and usually we see at the end of the year food inflation does become stickier. That's expected to come down in Q4. So that's the latest figure coming in as far as inflation is concerned. The slowdown that we are seeing in investment activity, that as per the CEA is only temporary in nature. Important again to mark out, because the capex in last year or the last 9 months has been on the softer side, but at least for now the assumption is this is temporary in nature. That animal spirit per se from the private capex hasn't completely died down. Maybe they were just waiting by for a bit more stability. Near-term global growth is expected to be a shade lower than the trend level. Again, something that the market has already factored in, and trade outlook might remain clouded for the next year as well. That's something that the market again has been dealing with, and that's pretty much par for the course. But the good news is that India, within all of that, has managed to see a very robust economy, and that's the reason we are still expecting the growth figure to be around 6.3 to 6.8% in FY26. Investment activity, again something which has been very, very important for markets to track, is expected to pick up. They haven't given a timeline for that. They are talking about how that is only slow down. The slowdown is temporary in nature. We do have Swaminathan Aiyar, the consulting editor, with us. Hi, Mr. Aiyar, thanks so much for making time and speaking with us. The GDP estimate 6.3 to 6.8%, you will say pretty much in line with what the street was expecting?
Well, 6.3 to 6.8 is quite a big range. So they are playing safe. All I can say is at this point of time, it's a peculiar situation where what Mr. Donald Trump says is affecting the markets more than what Nirmala Sitharaman is going to say. Nirmala Sitharaman, I think, was all set to do a solid budget in which she would claim victory that she had set a 5-year target of reducing the fiscal deficit, and she has achieved that with rising capex and 7% growth. Because of the shadow of Donald Trump, nobody knows what is going to happen over the next 2 years, because the guy keeps changing his mind, contradicting himself and announcing some very big things. When things are so uncertain, I'm afraid, instead of people putting saying go for the green light, everybody will be on amber. Everybody will say, take it easy, wait, be cautious. We have no idea what this madman is going to say. So I regret to say that if there is the growth is likely to be at the bottom of the spread of the economic survey, or maybe lower.
If you like this video, then like, share and subscribe to ET Now.